Okay. Hey guys, welcome back to our club. And today we will be discussing about the recent announcement of strategy. They have announced $1.44 billion of US dollar reserve to fund their dividend and interest payments they have a target uh, for this reserve between 1 to 2 years. So as of now, they have kept aside $1.44 billion to for the dividend payments and the interest payments which they have. Yesterday they made an announcement about this. Also, they have bought 130 more bitcoins. The funds were raised via MSTR ATM, and the average MNAV like uh, through this sold MSTR stock was 1.17 times. In this market also, they have proven the market that they are able to access capital markets. And before deep diving into the into this PPT, let me just come to this last thing which we discussed about in our previous sessions about this thing. I talked about S&P fund. S&P gave strategy an issuer rating of B minus, and this is the last part where they talked about an upgrade is unlikely in the next 12 months. Over the longer term, we could raise the ratings if we expect the company to improve US dollar liquidity. Strategy reduces its use of convertible debt, and the company continues to demonstrate strong access to capital markets even during a Bitcoin stress. So, by this announcement of $1.44 billion in the strategic US dollar reserve, essentially they have increased the US dollar liquidity. This is what I personally see. Maybe like how much liquidity do they want and all, it's up to them, but uh, like now to 21 months of dividend coverage is in the US dollar reserve. So anything happens with MSTR, anything happens with Bitcoin, um, they have 21 months of dividend coverage. So let's go through these slides one by one. I will just take you through where I find it's important and you guys need to know what's happening. I think this is also important. Revised BTC KPI targets for 2025. So earlier they had this, they have given this target of 30% Bitcoin yield, which they thought that they could deliver. But they have revised this target lower to 26%, like from 22 to 26%. Currently, they are at 24.6. Um, the Bitcoin dollar gain, they have revised to 12.8 to 8.4 billion dollars, and BTC price, they earlier had an estimate of I think 150K, and right now they have revised it to 85 to 110K. So they believe that in the month of December we will be in between 85 to 110K. Also, these figures depend on what's the Bitcoin's price as well. Then the next important thing about, let's say, I read it something on somewhere. If Bitcoin is at 95,000, then a company will close positive in profits. But if it's below 95K, then might be somewhat negative. Then they in this slide they are talking about their capital structure. I think you guys have seen this a lot of times. So currently the Bitcoin reserve which they have is around 59 billion. There, I think I should talk about this enterprise value. I think I have talked about it earlier as well, but still, if people find it difficult to understand what is enterprise value, so EV equals to market cap plus debt plus prefs minus cash. So this is what enterprise value means. And currently, if you see in strategy.com, the MSTR's MNAV you will see around 1.17. So it's one MNAV is 1.17. But if you see market cap here, market cap is 52 billion, and where is the total amount of Bitcoin which they have? The Bitcoin in dollars is 57 billion. So by seeing this ratio, you might think that MNAV is negative, but no, it's not. They take enterprise value instead of market cap. Enterprise value gives you holistic approach towards their company, because company is not only equity, they are also like debt, like their convertibles, their preferreds. So it gives you a holistic picture about the company. So yeah, that's what I wanted to talk about enterprise value. Going back to our slides. Yeah. So yeah, the loan to value. So currently their loan to value, if you consider only convertible debt, so basically 8.2 by what Bitcoin NAV. So 8.2 by 59 comes around 11%. And the right number, which I think is basically this convertible debt plus interest and plus dividends. So maybe you can assume it as 9 billion and then divide it by 59, and that will be your loan to value. Like that's my own personal metric. Because why I'm talking about this convertible debt plus interest plus dividends, it's simply because like they need to pay this back. In case of preferred equity amount which they have raised, the principal amount, that is never going back. It's simple, and that's why I feel like 8.2 plus 800 million in dividend, that makes more sense to me. So it will come around 12% or yeah 13% something. So yeah, as of now, strategy has 74 years of dividend coverage. So what does this mean is, like, even if Bitcoin is here at this price, they can cover dividends for 74 more years. So why are they talking about this, or why are we why am I taking sessions on this? Because currently, if you see on different kinds of social media and X and all, like everyone is talking about strategy is going to go bankrupt and they are winding up and all. So the speculation is some big players in the market have opened short positions as well. But yeah, I personally don't really think that strategy has any chance to go bankrupt. Like a company can just remain still alive for, like, most probably much longer. And this is what also Preston Peace talked about. So companies remain alive for too long before going bankrupt because they have access to capital markets. And like MSTR has proven by raising this 1.44 billion dollars in like 8 days or 7 days. um, so they issued MSTR when the stock was doing, when Bitcoin was like down, stock was down, and at this point in time they were able to raise 1.44 billion in 8.5 trading days. Here they have talked about their 8.5 trading days. So yeah, this proves the fact. I mean, this doesn't prove anything, but yeah, let's say if Bitcoin goes to 50K, and at that point in time, how much they are able to like access capital markets via MSTR or something else, that we have to see. But still, it's good. It's good that in such a, like, if we just consider MSTR as a leverage position on Bitcoin. So for example, last year this point in time Bitcoin was, yeah, it was here only like 90-95, and today we are at 84. So it's flat to slightly negative, and leverage position performs way like it gives you volatility on both sides. So if BTC rips, then MSTR rips more, and if BTC remains flat or like it is down, then the premium collapses, MNA premium collapses, and you most probably see MSTR much more down than the underlying asset, that is Bitcoin. So yeah, here they have talked about the 1.44 billion dollar which they have raised. So yeah, it's 2.2% of their enterprise value, 2.8% of equity value, and 2.4% of their Bitcoin value. So here they have talked about they have initial target of ultimately covering 24 plus months of dividends to strengthen their like goal. Basically, what is the game? The game is short fiat and long Bitcoin. So how are they going to short fiat? By raising digital credit. And by what do I mean by when I say digital credit? Basically, it's preferreds. Preferred like STRC, K, D, F. So all these different kinds of preferred stocks. Um, uh, Basically, this is digital credit, and this is why any Bitcoin treasury company matters. If they want to continue their business, uh, or like they want to position themselves as a leverage position on Bitcoin, the one thing which they need to do is issue digital credit, or issue like loans, or issue bonds, or issue something which builds your, like, issue credit. Basically, that's it. And any company who is not able to issue credit, that will not be here for a long time. If they are only reliable on MNAV, then maybe in the downturns it's hard. Look at other Bitcoin treasury companies out there who are just playing game on MNAV multiple. So whenever MNAV is higher, they were able to raise, and whenever MNAV is low, they weren't able to raise more money. But when you compare it to MSTR is still buying. I think last to last week they didn't buy, but um, like STRE, which we did a session maybe 2 to 3 sessions back, or 2 sessions back, they like raised around or something less than a billion from the Europe's credit market. So yeah, the game is this, like, issue digital credit, and whoever is successful in issuing digital credit, that player will dominate in the longer term. So I was listening to this guy named uh, Yves. Yeah, this one. Yves Joy Fati. I'm sorry for my pronunciation. I don't know what's the exact pronunciation of this name, but this guy is a mathematician, and he runs this Tobam. So, what is Tobam? Tobam is basically an asset management company offering, like, many things, but the thing which he launched earlier was Bitcoin. Like maybe he is the first TradFi guy to give institutions access to Bitcoin exposure. Like so he has his fund running, giving access to Bitcoin exposure from 2016 or maybe 2017. I have to check, but yeah, he was the one of earlier TradFi guys who gave this thing, like gave Bitcoin exposure to institutions. And I was listening to him in one of his interviews. He talks about what are basically Bitcoin treasury companies. So Bitcoin treasury companies, there is one book named Denationalization of Money. So he talked about that book, Denationalization of Money, and there in that book he says that money should be separate from the state, and like it should be issued by some these kinds of private institutions. And basically he talks about Bank of England. So yeah, Bank of England, when they started their business, it was started by few businessmen who were raising money to buy gold. And today we have these Bitcoin treasury companies who are raising money, raising capital to buy Bitcoin. So this is the same business model which Strategy and other Bitcoin treasury companies are in, and it's kind of similar business model, which was back in 1694, Bank of England. So yeah, this was he was talking about this. Go like maybe we will see what these guys have built throughout in one of our sessions, and yeah, we will check his background as well, and discuss about Toba more. So yeah, then I think this is covered. So here some modeling has been done. What happens if Bitcoin goes to this? What happens if Bitcoin goes up? What happens if Bitcoin's volatility is this? So in this image, as you can see, assuming Bitcoin price at $91,000 and volatility at 45% BTC volatility and 10% Bitcoin ARR. So basically, Bitcoin rises 10% per year. Then how does the credit side of strategy looks like? So essentially all the convertibles will be 7.2 times like over collateralized. What does this mean? This means that for every $1 of like debt, they have $7.2 of Bitcoin. And this is how other prefs will look like overall, 3.7 times over collateralized. Then our strategy to fund USD reserves. What is their strategy to fund this $1.44 billion US dollar reserves? So their strategy will be above 1 times MNAV issue common equity, and below 1 times MNAV um, sell Bitcoin or sell Bitcoin derivatives. Now this is the first time they like Saylor talked about this in Bitcoin Treasuries Conference, which happened maybe in Las Vegas or in New York. I'm not sure, but one of the guy, I think he was an Indian, and he asked Saylor like this question basically: what happens if Bitcoin goes 80% down, and at that point in time the stock is trading below NAV, and how you will raise money at that point in time? And give me the answer like bang on. He says this word bang on, and at that point in time Sailor says that yeah, we will do some derivatives, basis trades, collect premiums on options and all, but the last step which we will do is sell Bitcoin. Now here, this is the first legal document by the company where they talked about selling Bitcoin to fund those dividends. But as you all know, in many of my previous sessions, like selling Bitcoin is not a bad thing, especially if you are a company who is issuing digital credit. For example, let's say you have raised $1 billion in digital credit or preferred stock, and you have 10% dividend per year. Let's say, like, first year dividend will be 100 million. Second year, let's assume it's Bitcoin goes nowhere, it's still 100 million. Third year also, maybe it still goes nowhere and still 100 million. But fourth year, fifth year, in the span of 10 years, I'm sure that the amount of dividend which they will issue will be way lower in terms of Bitcoin. So, for example, to raise 100 million this year, they will have to sell 1000 bitcoins, and next year again 1000 bitcoins, next year again 1000 bitcoins. But fourth, fifth year maybe 500, maybe 400, and this thing will tend like to tend lower and lower, because of the nature of Bitcoin. Like, Bitcoin is designed like it's finite, and as the adoption grows, as Bitcoin's price grows, like you all know the story what Bitcoin can do, and this will eventually, like, in the span of 10 years it will be accretive for shareholders, even if company sells Bitcoin, because in the start they have bought, like, they raise 1 billion and they have bought 10,000 bitcoins in the first year itself, and they will be paying dividends in the coming 10 years. So that will be negligible amounts when you cross 5 years. Now, before going to this, I think I need to share this. Okay. So here is BTC derivatives. Now, how is Sailor going to raise money from these BTC derivatives? I think I should go back to this slide and then come on. Yeah, here in BTC derivatives, I will first show what is here, and then when we come to this, then I will talk about this Bitcoin derivatives. Okay, so we have built the world's first digital credit vehicle. So this is how they are representing. Basically, it's a diagram where they talk about like how they are going to fund those dividends. So as of now, they have $800 million of dividend per year, which comes to $2.2 million per day. Um, so for this, they have now like they have now this $1.44 billion in USD reserve to fund these dividends. Also, how are they planning to raise money to pay these dividends is by these ways. Like, they will issue MSTR, which has $3.6 billion of per day trading volume. So when you talk about like what percent or what basis points do they need to issue, so they need to issue 6.1 bps. So what is 6.1 bps? Basically 1% is 100 bps, and 6%, 6 bps is 6 by 100. So uh, like, this is it, like, it's 6 by 100 part of a percent. This is what Sailor needs to issue when he wants to fund $2.2 million per day dividend on their preferreds. Then comes Bitcoin. So, like, Bitcoin's daily trading volume, according to recent like maybe 30 days, is around $50 billion per day. And if they want to fulfill this 2.2 million, they will have to sell zero point 0.4 bps, or they will need zero point 0.4 bps of this $50 billion per day. And then comes BTC derivatives. Now, this might be surprising for some of you who don't understand derivatives and what happens in derivatives. So basically, whenever you see derivative markets are usually bigger than the underlying asset. So, for example, the euro dollar derivative markets are in 8,000 to 2,000 trillion. It's crazy numbers. So yeah, that's why BTC derivatives trade much higher in volumes. Now coming back to the other screen where I would like to talk about this thing. BTC derivatives, like what can they do? Basically, what can they do? So one is basis trade, one is futures trade, sell call options, sell out of the money options. Now, these two things are basically very this we can understand it. What is a call option? So for example, MSTR, or like in our example it's Bitcoin, right? BTC, let's say BTC is at 100K, and the option to maybe buy call option at 110K, I am getting it at, let's say, uh, 1K. So this is hypothetical example. I am not like taking real examples. This is just hypothetical example. So if 1K call a C plus, so this is call option of $1,000 price, and this is at the price of 110K. So basically what happens if Bitcoin goes from 110,000, sorry, 100,000 to 110,000, and if it goes above 110, let's say 211, then this $1,000 call option will be worth 2,000. So why? Because this profit goes to this call option holder. So for example here, uh, who is going to sell this call option for $1,000? Basically, who has bitcoins? So the person who has bitcoins can sell this call option to the call option buyer. Then now, who will be the seller here? The seller is going to be strategy, because they have around 6,50,000 bitcoins, and they are in the position to sell call options or sell out of the money option. Now what is out of the money? Out of the money is basically, let's say, a person wants to buy a call option of $200,000 price, and strategy, like, who can provide liquidity? Strategy can provide liquidity because they have six like this much amount of bitcoin, and they can keep some bitcoin in collateral, and sell this call option to someone who is willing to. And whatever the premium, let's say now, in our example, this BTC is at 100K, and it doesn't go to 111K, it stays here, or it like goes down. Then in this case, the call option seller will be in profit, like they will keep this premium of $1,000. Now this is how they are planning to, like, run some derivative strategies, and generate some income. Also we know that Metaplanet is also a company who runs this Bitcoin income generation business. What they do is, like, they sell CSPs, cash secured puts. What does this mean? They sell put options to the buyers of that put option. And what is basically happening is, let's say, Bitcoin is at 100K and it goes to 95K. Then like, the amount they raise, Metaplanet, let's say they raise $100, then $5 goes to this CSP kind of a thing. So here they, by keeping this $5 as a collateral or with the broker, they sell these cash secured puts. And what they do is, like, um, let's say instead of buying at 100,000, let's say Bitcoin's price falls to 95K. Then in this position, uh, like, they will have to buy because they are the seller of put, and the buyer of put has a negative position on Bitcoin's price. That buyer of put is saying that Bitcoin is going down, and if Bitcoin goes down, then they need to buy Bitcoin at 95K, and if Bitcoin goes up or it stays above 95, then they will collect the premium which they earned, let's say $1. This will not be this much higher, but yeah, for our example, they will collect this $1 premium if Bitcoins remains at 100K or above 95K. They will collect some premium here. If Bitcoin falls below 95, then the thing is that if Bitcoin goes to 93 or 92, they will still need to buy at 95 because they have sold the option to buy at 95, and that's the reason, like this is the risk in their strategy. If Bitcoin falls much more, then they have to figure out, and that's why they are doing only with 5% and not the entire capital which they have raised. So these were the some methods. I talked about call options, I talked about out of the money. Out of the money is basically like the price which is too far from the current market price. So basically 90, 80, 88, 89, 90 will be, or current price of Bitcoin is 85, 86, I don't know. The price near the current market price is at the money, and yeah, the price below or above the current market price is out of the money. So out of the money premiums are generally lesser, and at the money premiums are generally higher, and this is how they are generating like premium income. And this is one of the ways through which they can generate cash to pay dividends to the preferred stocks. So yeah, there are also futures trades and basis trades. This we will talk in maybe some of our next sessions, but for now, this is what I wanted to explain now. Coming, yeah, the one more announcement, like STRC's dividend rate has again been increased by 25 basis points. So now it's 10.75 basis point, sorry, 10.75%. So on $100 you are getting $10.75 in dividends per month, sorry, per year. So yeah, this was about strategy till here. If someone has any doubt, feel free to ask.
The increase, which was increasing in interest rate to 10.75, will it be applicable to older investors also, or just new issuance?
Yeah, yeah, for everyone.
Okay, okay.
Hi, can you explain again how they got the $1.44 billion?
So they issued
I couldn't get that
MSTR
completely.
stock. They issued MSTR stock at 1.17 times MNAV. So they sold MSTR stock in
Okay,
the
so
market.
they sold their own stock and okay.
Yeah,
And they were
basically
doing
ATM.
it previously to buy Bitcoin, right? They were doing the same thing, but bought Bitcoin in the proceedings, correct?
Yeah. So this is one of the
Okay.
way where if MNAV of the stock is above one MNAV, above one
Mm.
times MNAV, then um, they will sell MSTR stock instead of selling Bitcoin, because essentially it is more accretive to sell. For example, let's say you sold Bitcoins, and you sold $100,000 of Bitcoin, and you will raise $100,000 of Bitcoin. But if your stock is trading at 1.17 times NAV, then uh, you have $100,000 of Bitcoin, but you have sold $117,000 of your stock. So that is much more profitable for the company to, like, it's just most efficient way for a company to raise capital to pay the dividends.
Okay, okay.
Does anybody have any other questions? And I think that the other part of our story today was this JP Morgan's products, but this is highly complicated and I am not prepared for you guys to tell what's happening in these products. So um, like maybe we can do another session, or I will just give you a brief and then we will stop recording and open the floor for chat. So for just a brief, to the people who are not aware what has JP Morgan done, so JP Morgan has launched Bitcoin backed notes. So what are notes? Like basically they are not paying coupons. So we understand it like this. For example, $100, a company raises $100, and for 5 years that $100 are locked. But the dividend or the coupon gets accreted each year. For example, let me come to the white screen. Yeah, I'm coming to white screen. So in case of these JP Morgan Bitcoin backed notes, what is happening is like they are issuing notes which is giving, like they are also structuring Bitcoin's volatility and return, the same thing which Sailor is doing by issuing preferreds. So for example, like STRC is least volatile. MSTR is highly volatile, and BTC is in between in these, like it has its own volatility. Then all the preferreds like STR, KF, D are like basically the similar model is being played by JP Morgan also. So they are also chopping Bitcoin's volatility, and by chopping Bitcoin volatility, they are transferring it to like they are also chopping off returns or expanding their returns. So similarly, what is happening with notes? So they have come up with three kinds of notes. I will talk about those three kinds, but for now, understand it. What is a note? I was talking about this note. So in this case, the notes which they are raising, the coupon, let's say $100 note they have raised, or $1,000 note, and for example, they are paying 10% coupon. So this 10% coupon is like accretive in the life cycle for 1, 2, 3, 4, 5. Okay, so $1,000 is raised here, and then at the end of like this will be the end of first year, second year, third year, fourth year, and fifth year. And somewhat Bitcoin's appreciation is also linked with this $1,000. So by issuing coupons, they will not give you in one of their product, they will give you 50% of Bitcoin's appreciation. And in some other product, they are planning to give 150%. So, so these are some different kinds of product which they have launched. But the thing with dividend is like they will not pay dividends until its maturity. So it's a like at maturity only all these dividends will get paid. So $1050 will be paid at the end of fifth year. So this is what like JP Morgan is doing with their Bitcoin backed notes. Now the notes, if notes is clear, so now they have launched three different types of notes. Auto callable accelerated barrier notes. This is first one. The second one is auto callable dual directional trigger plus. Then this is also same auto callable accelerated barrier notes, which is due in December 2028, and the earlier one was in November 30. So these both are same kind, but just the due is different, like when it's due. The first one is due in November, the other one is due in December. And this one is one more product which provides leverage upside, like the one which I talked about, like 1.5% leverage upside. So yeah, this was the general overview of what JP Morgan is has launched. For now, I think this is only like this is what I can talk about. Like I need to do much more research and see how they are structured and whatnot. But yeah, for today, this was it. And yeah, the floor is open for chat. Jatin, you can stop recording.
Amdap, can you go to that last screen which you had shared?
Yeah.
The notes part.
This one?
Just a minute, it is not visible
Okay.
yet. No, the screen